Hut 8 Corp is currently trading at $40.62 USD on the Nasdaq, showing a significant move of plus 3.77 or 10.23% during today's session. While the broader market might be looking at this as just another volatile day in the crypto sector, there's a much deeper story playing out beneath the surface of this double-digit jump. Most investors see Hut 8 as a way to play Bitcoin, essentially treating the stock like a high-beta proxy for the digital currency itself. If Bitcoin goes up, Hut 8 goes up. If Bitcoin stumbles, the stock typically follows. However, the reality of what happened in the last 24 hours suggests that the market is finally starting to price in a massive pivot that has almost nothing to do with the price of a single token. Just yesterday, the company announced a massive 15-year, $7 billion lease agreement with Fluidstack for nearly 250 megawatts of IT capacity at their River Bend campus. This isn't just an expansion of their footprint, it is a fundamental shift toward high-performance computing and AI infrastructure. The expectation among retail traders is often that a mining firm lives and dies by its hash rate and its strategic reserve of digital assets. While Hut 8 does maintain over 13,000 Bitcoin on its balance sheet, the narrative is shifting from mining to power. In a world where AI companies are desperate for energy and specialized space, Hut 8 has realized that their most valuable asset isn't the Bitcoin they mine, but the grid connections they control. They are sitting on a development pipeline of over 8,000 megawatts. To put that in perspective, that is a scale that rivals some of the largest utility-scale infrastructure players in North America. This creates a tension between what the casual observer sees and what the institutional players are starting to realize. If you are using an online investment platform like Interactive Brokers or checking your Fidelity brokerage account today, you might see the ticker popping and assume it is just a relief rally. But when you look at the volume, it becomes clear that institutional interest is picking up because Hut 8 is effectively turning into a specialized real estate and power play for the AI sector. This move toward becoming an energy infrastructure platform is exactly why the stock is behaving so differently than its peers today. While some other miners are struggling with the rising difficulty of the network and the shrinking margins of the post-halving environment, Hut 8 is diversifying their revenue streams. They are no longer just selling coins to pay the bills. They are signing decade-long leases with AI firms that provide predictable, high-margin cash flow. This is the reality that is currently exceeding the market's expectation. Many people still have the old Hut 8 in their minds, the company that was embroiled in a merger that faced heavy skepticism from short sellers earlier in the year. That old narrative suggested the company was a mess of legacy assets and inefficient operations. The new reality, however, shows a management team that is aggressively cutting underperforming sites and pivoting toward the most profitable use of their power, artificial intelligence. The trading activity we are seeing on platforms like Robinhood and SoFi Invest reflects a growing realization that Hut 8 might be the most undervalued AI infrastructure play on the board. Most pure-play data center stocks trade at massive multiples because their earnings are seen as stable and growing. Hut 8 still trades like a volatile crypto stock, even though more of its value is being derived from its $500 million AI partnership with firms like Coatue. This gap in valuation is where the opportunity lies. If the market starts to value Hut 8 based on its power capacity and data center revenue rather than its Bitcoin production, the current price could look like a bargain in hindsight. Institutional activity has been telling. We've seen increased positions from major players who are likely looking past the daily swings in crypto and focusing on the long-term utility of the company's 1.5 gigawatt expansion program. It's worth noting that despite this positive momentum, the stock has been through a blender lately. Just a few sessions ago, the shares were taking a beating as Bitcoin retreated from its recent highs near 90,000. This created a perfect entry point for those who understood that the Fluidstack deal was on the horizon. If you're someone who does your own self-investing through a Fidelity mobile app or another online investing tool, you've likely felt the sting of that volatility. But the smart play here is looking at the capital strategy. Hut 8 has been incredibly disciplined with their equity issuance. They terminated a previous at-the-market program with 40% of the capacity left unused because they didn't want to dilute shareholders at lower prices. That kind of management discipline is rare in a sector known for growth at any cost. It shows they're focused on building actual per-share value rather than just chasing a bigger hash rate for the sake of headlines. Let's look at the business model for a second because it is the core of the bull case. They operate 4 distinct segments now: power, digital infrastructure, compute, and a small remaining tail of other services. The power segment is the crown jewel. They manage 15 sites across the US and Canada. They aren't just consumers of energy, they are developers of it. They find locations with stranded power or favorable grid conditions, secure the interconnects, and then decide the most profitable thing to do with that power. Sometimes that's mining Bitcoin through their subsidiary American Bitcoin. Other times it's building out clusters of NVIDIA H100 GPUs for AI clients. This flexibility is a massive competitive advantage. If Bitcoin goes to the moon, they ramp the mining. If AI demand keeps skyrocketing, they pivot that power to data centers. They're effectively a hedge against the uncertainty of which technology will dominate the next decade. The institutional side of the house is where the smart friend would tell you to look. If you look at the recent 13F filings available on most investing sites, you'll see that firms like Millennium Management and Jane Street have been active. They aren't just buying the stock, they're playing the options. There's a heavy amount of call activity, suggesting that big money is betting on a continued breakout. This institutional stamp of approval often acts as a floor for the stock. When the big boys start treating a crypto miner like a serious infrastructure company, the volatility usually begins to dampen and a more steady upward trend takes hold. This is a far cry from the days when Hut 8 stock was just a speculative play for people with a high risk tolerance on the Robinhood app. Comment below how many shares of Hut 8 you currently hold, or if you were looking to enter a position at these levels. I'm curious to see how many of you caught this move before the Fluidstack announcement, or if you're just now looking at it as an AI play. The future outlook here is dominated by the execution of the River Bend project. This is a massive undertaking that will require significant capital and technical expertise. The risk, of course, is that building data centers is not the same as plugging in mining rigs. It requires a different level of uptime, cooling, and client management. If Hut 8 fumbles the rollout or faces delays in getting their full power capacity online, the market will punish them. They are currently trading at a premium valuation compared to their historical average because of these AI expectations. If they don't deliver on the revenue ramp from these leases, that premium will vanish quickly. We also have to consider the macroeconomic backdrop. If interest rates stay higher for longer, the cost of developing these massive energy projects goes up, which could squeeze their margins. However, the catalysts are lining up. We have the potential for more GPU-as-a-service announcements and more high-profile partnerships. As they prove they can successfully manage these AI workloads, they will likely attract even larger clients. The integration of power and compute is the ultimate goal here. By owning the power source and the hardware, Hut 8 is cutting out the middleman and keeping more of the profit for themselves. This is a strategy that many of their competitors like Riot or Marathon are also trying to implement, but Hut 8's early success in securing massive long-term AI leases gives them a significant first-mover advantage in the mining to AI transition. When you look at your Schwab Intelligent portfolios or any Fidelity Wealth Management dashboard, you're looking for assets that can provide growth in a shifting economy. Hut 8 fits that bill because it bridges the gap between the old digital economy and the new AI-driven one. They have managed to survive multiple crypto winters and come out the other side with a stronger balance sheet and a more diversified business model. They aren't just a survivor anymore, they are becoming a leader in a brand new category of energy infrastructure. The old expectation was that they were just another miner with a fancy name. The new reality is that they are a power company with a technology edge. To wrap this all up, today's 10% jump in the price of Hut 8 stock is a clear signal that the market is re-rating the company. We started the day at $40.62 USD, and the momentum appears to be holding as investors digest the implications of a $7 billion lease deal. The tension between the expectation of a volatile Bitcoin proxy and the reality of a stable AI infrastructure provider is being resolved in favor of the latter. While the risks of execution and crypto volatility remain, the company's massive power pipeline and disciplined management make it a standout in a crowded field. Whether you are using a Fidelity trading platform, Interactive Brokers platform, or just checking your Robinhood investments, the story of Hut 8 is no longer just about the next block reward. It's about who controls the power and the compute in the age of AI.